We're going to go to the beginning of the chart, okay? So how I draw my support resistance on the macro time frame, you don't have to do it this way, but this is a my boy G's on point, bro. Good shit, brother. Love that stuff, man. Kiko position, man. Understand what you're looking at. I don't expect all you guys to understand what that is just yet, so don't feel don't understand. I'm gonna teach you in future class. I'll probably teach you that in class 3. But all that, you got beautiful positions. Now you have a better position with more conviction on your invalidations, right? If you're not in from the lows, which you could be. Follow Woods. Now we look for the break. Look what happens here. You get a flip up here. Good. Then you get a move up here and a flip back here. Good. Now what's happening here? Where are we looking to get long? Either here or here. We retest here. Beautiful. Move your stops up on this type play because this is a very aggressive flip. And it 20% bounce. It doesn't look like it, but it's a big bounce. You secure profit on that play all day. This is what you're looking to get long on. You're looking for this level to flip because odds are, if we're continuing to trend upwards, we should not retest this level again. We should, and remember, you should be in spot from here already. So all your spot positions, regardless of where you bought, should be up 142%. Beautiful. That's why you buy spot on levels like that, because those are highly convicted plays. Now we're at levels that we traded at previous that we're looking at to flip. Remember, we need this level to flip to get long. We still need this level to flip to get long. We still need this level to flip to get long. So if this level is not going to flip the first off, if this level is not going to flip, then this level has to flip. If that level is not going to flip, that level and then that level. And then odds are, if we're moving that low, we're probably going to continue down. So understanding market structure will go a long way, and I'll explain a little bit of market structure as well in future classes, but I recommend you guys looking for some education about market structure because it's very important to understand market structure, especially in a trading environment and stuff like that. Whatever we reverse down, reverse back up, you want to understand, like, okay, if we retest here, we're still good for longs. If we retest here, we are still good, but it becomes a little weary. If we're here, probably going to have to look to short this for a move back down, right? Just understand the market structure, understand the PA before it happens. All that goes a very long way, guys. So again, we had a position here. We're automatically profit. We secure, we move up our stops. Now we're looking for a long here. Boom. Swept this liquidity. So what happened here? We swept whoever took positions on this flip, who did not secure for whatever reason, whoever did not secure off this move up is out of their position. And we closed above. We printed an SFP above their positions. I'm explaining you what the SFP is again in class 3 probably. And that's just a beautiful position. We look to long this level. Now we should continue up. We're looking to flip this level. Always look for chart patterns as well, guys. So in turn, always look for your trends. Always draw them, guys. Always draw out your trends. It's important. What is printing here, guys? What does this look like? What is this? It's not a flag. Looks like a flag, but it's not a flag. A bullish pennant. Exactly, bro. You could call it a symmetrical triangle, More. Not bad, but it's a pennant. It's not a symmetrical triangle. Symmetrical triangles are bilateral chart patterns, meaning they could go up or down. Bullish pennants are bullish chart patterns, meaning that they are causes of continuation. So if you're looking at this pennant right here in an uptrend, this is a bullish pennant. You're looking to long for the break, or you're looking to long the break once it happens if you're not long from the bottom. So this is another long entry on a higher low if you're not already down there. And then we break, retest, right? We retest that before moving up higher. This is another long entry. You got 3 long entries right there. And then we eventually flip this level upwards. Remember, it's a range. Remember right here, guys. That's why I want to emphasize your support resistance on the macro time frame, guys, is a range. Remember what we were looking for previous here? We're looking for this level to flip. It tried, and then eventually it did. And when it did, it flipped the range. It did not give you one particular line tap, although on the lower time frame, it probably did. Even on the 4-hour, kind of weird on the retest. On the hourly, I don't want to click that because it's not going to let me go down low. Actually, will it let me go down hourly? Yes, it will. On the hourly, you got a very, 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 very close flip right here. Not right on. Like I said, not one particular line tap. Don't got to play one particular line tap, guys. We're talking about ranges of support and resistance. Okay, guys? Ranges of support resistance. Very important to understand that. And this is how it looks. I mean, it's beautiful. Like it's just beautiful when you simplify things and when you look at things logically. It's amazing what you can do with the market, right? And now this all-time high is looking to flip. What are we going to look? We're going to look for longs. We're not looking for shorts. We closed above. Now you have to look for longs. You go long here. You can try along the lower end. You go along the higher end. Wherever you could get long here on the all-time high flip is where you look, right? We're trying to break down. Are you looking for a short here? No, you're looking for a long. That's a long all day. And we pump, and then it retests one more time before doing what? Legging up. And then it even gives people a Hail Mary entry after the leg up. Another long right there. That's a beautiful long. All around your all-time high flips. That's an entry for long. And then again, guys, we're going to chart the same way we charted down here, up here. But I'm going to let you guys do that in your homework. Okay, guys? Every chart is going to be different. Every chart's going to be different. You don't always have to go to the beginning of the chart. Right? And I'm not talking about weekly and monthly. When you're talking about the weekly and the monthly, that's a whole different story. You got to look at it from the weekly and the monthly, and you got to understand that it's the weekly and the monthly time frame. When you're looking at the 1 day, you always know it's the 1 day. I'm always looking at the 1 day. Everybody should always be looking at the 1 day almost every day. Like there's no like rhyme or reason of drawing your support resistance. Like I said, the reason why I explain it the way I do is so that you guys have a system on how to draw it. That way you guys like, if all else fails, if you don't understand exactly. And the reason I also explain like that too is because like whenever, like I said from the beginning, if a brand new coin just came on the market, this is how you're going to draw it. And there's going to be hundreds of brand new coins coming on the market. This is how you're going to find it. This is the only way you're going to find it. So if a coin like Ethereum, you have years and years of price action. We've been trading around this $1,800 price for months and months and months. Like you don't have to draw from the beginning. You could look at the price action now and trade it now, like how it's trading. But all right. So now we got this move up. So now what are we gonna do? We're gonna draw our lines again. We got our horizontal lines. I'm gonna go very quick, guys. We have resistance here, but we're not gonna draw too close to support. We got that level of resistance, so we're gonna draw that. Bam. We got this wick up here. That's our range. We got this candle closure right here. We got this candle wick right here. That's our range a little bit. Bada bing. And then we got this level right up here. And then we got this candle wick right here. Bam. So these are our levels. That's it. That's all it takes. And there's going to be a level in between that we're going to have to decipher, obviously, when it comes. But in this move up, these are all your levels, right? So now, if we're looking at the macro level, what levels are we taking? We're looking for a long here. There's probably going to be a level that reacts in between. And then if we retest here and go back up here and we top off, just like we saw, it's all hindsight, we're going to short. So the price moves down and it creates, just like it did below, guys. Yeah, you can use OXO, no worries. Just like it printed right there. We created our level in between. This is our level in between, guys. We're going to have to create somewhere in between if we want to play it. That's our level. Okay, now price came down, almost retested our zone almost perfectly. That's why I say it's a range, not one particular line tap. This is a range of support. So you should be in the play regardless of where it tapped. It might not tap right away or right on it, but it's going to tap around it. And that's exactly where it held. And look at our level right here. It held for a flip up. So not only could you have caught along right here, you could have also caught along right there. And just look out. Now I just want you to look. There's one more play we could have caught there with a higher low. Just look how price reacts. Like, look at that. Perfect short opportunity, twice with the lower high. Moves up. Perfect flip opportunities. Perfect short opportunity with the lower high right there. Perfect flip back up opportunity, even though it deviated. Perfect short opportunity right before the eventual cascade down right here. And this is the capitulation in 2021. You could have literally caught the pico top of this capitulation in 2021. You just had your levels. And obviously try to right there. That's why I say you might have to try your levels more than once. Right here on this deviation, you might have wanted a short here. Logically speaking, that's a logical short. After that deviation, that's logical. It wasn't its time. Then eventually came down, and then look what happened. The same play played out right away. And in one day, you could have caught that capitulation. A 58% move down in 1 day candle. You know what I'm saying? That's like the power of macro support resistance, guys. Now, for your homework, what I want you to do is I want you to gauge all these reactions. I want you to gauge all these reactions and then everything else after. That's your homework. You're going to draw all your lines just like I did, and you're going to gauge every single reaction after the ones that I gauged. That's about it.